Hello, everyone. I'm so happy to be back again with another fireside chat as part of uh, the future outlook for the CISOs. So today I have with me, and this time again, also another author of a best-selling book, Monkey Shakespeare Typewriter, Cybersecurity for Everyone. He's also a co-founder and a COO of Risk Quotient. He's none other Chaitanya Kunte, right? And he's very well popularly known as CK. So he has had a very colorful, illustrious career with KPMG, MIL, and of course he started with Zenith Infotech. And today he is the co-founder, COO of Risk Quotient. So he consults for several organizations, and I've had the privilege of knowing him for nearly 20 plus years, right? So he's been in the industry, he's seen the cybersecurity landscape evolve over the years. So today for the topic, we have selected the synergy of insurance and cybersecurity, a risk focus. And as all of you keep talking about cyber insurance, and even the boards in every conversation also have started discussing cyber insurance as a requirement. I requested CK to be on this fireside chat to bring context to this important topic. Why are everybody talking about this subject? What is it that we need to be aware, and what is that we should be doing? So, CK, starting on, right? I mean, I'm sure in every conversation, people keep talking about cyber insurance, or they think that cyber insurance is that magic pill which will do wonders with respect to preventing or mitigating all the cyber risks. I'd like to understand from you and explain to us what cyber insurance is and its fundamental role in managing cybersecurity risks.
Yes,
Okay?
yes. Good morning, Sujit, and it's good to be here. Uh, so when you talk about cyber insurance and you want to merge it or sort of amalgamate it with the cybersecurity business, you and I have been in cybersecurity long enough to know that you know there was a time when there was no cyber insurance as a product and we couldn't buy it, and we had always, in theory, understood that when you do a risk management, when you do a risk assessment exercise in cybersecurity, you have four options to handle the risk. You could mitigate the risk, put in controls in place. You could avoid the risk by not doing these activities. And one of the things that was very important was you could transfer the risk. And it was always a very theoretical game for us. I could transfer the risk, and we had a vague idea that this is insurance and we could buy insurance. But till cyber insurance came into the picture, till the insurance professionals decided that decided that this is an insurable risk and that they could write this kind of a risk. Till that time, we didn't have an inkling of how we could transfer our risk. You know, and that's how we landed up now with cyber insurance. It's a form of risk transfer, where I say that I know that I have certain risks, but should those risks occur, I will be hopefully adequately compensated by an insurance policy which covers those risks. So that's how cyber insurance amalgamates with the entire work that we do in cybersecurity.
So CK, it is interesting when you speak when you spoke of the treatment methods, right?
Yeah.
So the way I see it is the landscape has been evolving, and
Hmm.
we too, both of us, also have evolved with the risk transformation or the landscape, the threat landscape as to how it has
Hmm.
evolved. And the cyber insurance has become another control which people can think of, right? So that typically gives us the context to the risk or the evolving threat landscape. I, I want you to spend a little time, telling us. Everybody talks about risk assessment, right? I mean, if you talk to the finance guys, they talk about finance risk, or if you talk to the bankers, they talk about from a Basel perspective, they talk about the operations risk, the credit risk, the market
Yes.
risk, and there's different names which different organizations use to look at risk from different perspectives. Now, how have people incorporated uh, the cyber aspect into risk assessment? I know from a when you talk from a PCI DSS perspective or from a ISO 27000 implementation perspective, the backbone of these standards or industry best practices is built on risk management.
Yes.
How do you see the synergy coming into play between insurance and the risk management? Okay.
Yeah, I think that's a very good question, Sujit. And I'd like you to think about it from the perspective of the board of directors of any company. Now, the board of directors is tasked with obviously running or guiding, directing the business in the right direction with all the right controls in place. Now, when you are a member of the board and you're thinking about how this business is sustainable, how can I make it profitable? One of the things you're thinking about is what are the risks to my business? And that's how enterprise risk management comes into the picture. And the board calls in the chief risk officer and says, okay, Mr. CRO, can you tell me what are my risks? And the CRO talks about, okay, I have market risks, I have finance risks, I have foreign exchange risks, I have so many of these risks in my business. And one of them is a cyber risk, which I have, which means I'm so heavily dependent on my technology and my systems that should there be a problem with this, I will not be able to continue my business. I will have reputational loss, I will have financial losses, I will have regulatory losses, I'll have a lot of these losses. And that's when the CRO says, well, to know more about it, can I call in Mr. CISO? And that's where the CISO comes into picture. And that's where our PCI DSS, our ISO 27001, our NIST, all of the frameworks which talk about risk management comes into the picture. And we start talking about risk. Uh, so if you remember when we do an assessment in risks, we said, look, let's list down all our information assets. Let's identify what types of assets we have, what happens to them. And we analyze them on something like a CIA, confidentiality, integrity, and availability, and what would be the impact. And you then take it up, roll it up to the level which says, okay, how does this affect my organization? What are the things that will affect? What are the things that the board will worry about? And it's at that point of time that the cyber risk assessment, which we do, adds value. And that's where, at some point, we have always been losing the game, for a few years, where we said our systems are not patched and therefore we have a risk and we should really mitigate it. What we really meant was there is a chance of a huge business interruption loss coming up. You know, what we need to do is slightly tweak the language which we are talking. And that is what cyber insurance is doing. It is making the stock about what is it that you want to insure? What is the monetary loss? Because insurance has a philosophy of insurable and non-insurable risks. An insurable risk is something which is tangible. I know that an insurable risk has to have certain parameters. And luckily, cyber is now an insurable risk. So uh, when you talk from an insurer's perspective, an insurance perspective, you realize that you have to really streamline your risks in a particular direction so that you can buy insurance for it. So that's the whole thing, that how it ties in right from the board to how the insurance industry has helped us, in fact, to uh, identify the right way to look at risks.
What caught my attention are two words: right?
Yes.
More than once you spoke about this
Mhm.
measurable risk, right? And
Yeah.
then you're also talking about insurable risk and
Yes.
uninsurable risk.
Yeah.
Right? So I'm just trying to ask you the same question. So when we look at our risk assessment methodologies, right? So we
Hmm.
talk about qualitative and quantitative.
Mm.
Now, several organizations are happier to take the easy way out. So they would probably go and do something in the lines of a qualitative risk and not a quantitative risk,
Yeah.
especially in the cyber space, right? So they identify the assets and they bring in the CI values. And again, it's a qualitative value assigned to each of those attributes
You have a risk
and
matrix, high, medium, low. Yeah.
high, medium, low. So how do we equate that and say, hey, here is my measurable risk? Because we are traditionally talking about a qualitative risk and not a quantitative risk. Or
Yes.
have organizations started to transform to, to a quantitative risk management methodology? Okay?
Yes. So I think we'll talk about this with an example that we almost all of us will relate to. Uh, Organizations implement something like a business continuity planning system, a BCMS, because they don't want to have any downtime. So just a simple example. Let's say you're running a website, which is what makes you money, and therefore you want to make sure that it continues. And you put in the controls which says, okay, I will have a DR site, and that site will always be available. There will be two copies of my data and everything that you do to ensure that you have a business continuity plan in place. Now, a business continuity plan is a risk mitigation strategy and trying to reduce the risk of downtime. But now, let me just think about it in two perspectives with respect to the question that you have asked. The first is, does a qualitative low, medium, high risk sound good enough? Because we talk about measuring risks all the time. Well, the first part, uh, it's quite straightforward. So I know that it is a high risk to my business if my website is down. I don't need to do complex calculations for this. I can say it's a high risk. I will put in the controls in place, which is essentially put in the money to ensure that I don't have any downtime. And that's also something which I can very straightforward have an insurance for. I can say this is where we start talking the insurance language, which says I'm going to buy insurance for business interruption in cyber, which means that if my business stops because of my website being unavailable or because it has faced a DOS attack, it has whatever is the underlying causes for my website to be not available, I am going to buy an insurance for business interruption. And that is where it starts to get interesting because you get asked the question, how much should I buy? And that's where all the discussions start to happen. Now you could do a very simple back of the envelope calculation and say, look, I get X dollars of business from my website on a daily basis. I don't expect to be down for more than 7 days. If that's the worst case scenario, can I buy insurance enough to cover for 7 days of business interruption? But that would be thinking very simplistically. And believe me, it works. You could just sit at the back of the envelope calculations while you're driving to work. Uh, while the cyber insurer is coming to meet you, you can say, this is the max. Can I buy this much insurance? And you would reasonably be in the ballpark. What you really want to do, if you want to get into a little more detail, is to understand how does this impact my future? If I'm down for 7 days, would I have future business losses? Because e-commerce is a very cutthroat business. And if you're on Amazon and you say Amazon is down for 7 days, by the second day, almost everyone would have switched to some other e-commerce platform, and you might never look back. And those are the risks which are very difficult to quantify. And that's where you need to have a formal cyber risk quantification mechanism The moment you talk about quantifying cyber risks and putting a dollar value to your losses or to the impacts, that's where cybersecurity professionals tend to get very worked up, I would say, because it involves a lot of mathematics and it involves a lot of probability computations. But it need not be as bad as it looks. Because, like I said, right from the ballpark, you can start and you can start doing the math slowly, building it up into your ecosystems. Uh, in fact, there is a very huge domain in cybersecurity called cyber risk quantification. If you just search for it, you'll find so many of these things that are coming up. There are methodologies around it which have been there for a long time. Some of them are adoptable, some of them are complex. So there are multiple ways in which you can do it. In fact, one of the things which we very specifically do at Risk Quotient is help organizations build a cyber risk quantification framework for themselves. So yes, cybersecurity is going towards a direction which will help understand the business impact of a risk happening. And again, this rolls up to the board. You say, look, this is how much impact you're looking at. That's always a good answer to give to the board. I know this is my impact.
Interesting points there, CK. You talked about measuring the risk.
Yeah.
Uh, and initially, when the cyber insurance product was introduced,
Hmm.
there was this perception that it is not a measurable risk, right?
Right.
So the insurers were a little apprehensive about awarding a insurance contract to any organization because it can have that ripple effect of a cyber incident, right?
Yes.
Especially when you look at a supply chain kind of an attack, then
Right.
it is not one organization, you're talking about multiple organizations, right? So one incident, multiple organization impacted, and the claims can be staggering,
Right.
right? So there are a couple of things I want to get you to walk me through.
Sure.
You did briefly mention about risk quantification, right? Is there a way, a scientific way of organizations can do this calculation and say, hey guys, I mean, this is my risk exposure, and this is the value I should actually look for in terms of a premium. Do you know of anything which organizations can, use or do to arrive at that premium values?
Yes. There are multiple techniques you can use. Some of them are right, very scientific and to some extent complex, like FAIR. I don't know if you've heard of FAIR. FAIR has been around for a long time now. Uh, it promises to be scientific. I don't know after a point in time how much of the quantification really helps, right? Uh, One thing to remember, and this again I've learned from the insurance professionals, is the difference between being accurate and being precise, right? Uh, Being in the right ballpark, in the correct direction, is more important than having an exact figure. As saying that I need an insurance for $36,343. That's something which is not very. It's not required. You don't need to go to that kind of a level. But I need to know whether I should be in the 30 million range or should I be in the 100 million range. That's what is more important. And those things can be computed when you do the basics of probabilities and in the basics of statistics. You don't need to do higher level mathematics for it. It's not very complex. Getting to the right ballpark is the first step that you should always look for. So, like I said, like we were talking about the example of a website being down, and that website earns you, let's say, $1 million in a year. You know that in a month I'm going to have X amount of money that is going to be made. And I could do a ballpark for some of these things very easily and say, look, maybe 50% of my business goes away completely if I'm down for a time. So let me address some of that. I will have to spend some money on advertising to bring me back again. So all of those can be computed. What it requires is the ability to sit and think like a business, and that's something which is being built right now in cybersecurity professionals. Right? And thanks to cyber insurance, this has actually helped identify what exactly do you need the insurance for, what exactly do you need the money for, and that helps you quantify.
Okay, I'm going to take that last word which you mentioned.
Sure,
What
sure.
exactly do we need insurance for? Right?
Yeah,
So today the businesses are using words such as resilience,
yeah.
right? Then you mentioned about business continuity plans, and then others talk about disaster recovery plans. Are we looking at insurance for the gap in the organization, or is it something else? What are we getting the insurance for?
Right. It's
I
it's a
mean, if
very
you
good
can,
point.
I'm going to interrupt you again, right? And I just want
Sure.
you to bring in the context of the first party risk, the third party risk, and maybe relate that what with that answer which you plan to give.
Yes. So this has always been something which confuses people and confuses all of us, right? Because there are so many things that we want to really have as insurance. Because when we do a risk assessment, and we have done enough in our days, we have stared at enough Excel sheets to know that there's a list of 100 things that we come up as risks, and then we are lost. Which should we buy insurance for? Which of these risks? And some of them are quite simple. It says I don't have antivirus on all my desktops. I have not rolled it out completely. All right, I am allowing BYOD on my systems. How do I measure that risk? And what do I go and tell an insurer? That I allow people to use their personal mobile phones to access business email. Is it a risk? Is it uninsurable? Should I buy insurance for it? How much should I buy? And that confusion can be eliminated when you start talking about what types of insurance should I be looking at, right? And you very rightly talked about first party and third party kind of things. Let me come to that for a bit. But I think let me first take you to the basics of what what should you look for as a cyber insurance kind of coverages, as we call it. The first thing that comes to mind, and that's something which everybody thinks about, is business interruption. So cyber insurance does cover business interruption, which means that because of somebody bringing in a personal device, it can result in a malware attack, it can result in a ransomware attack, which will bring down my network, which will impact my business, which is leading to something like a business interruption. So business interruption is a cover which, you can point a lot of risks to business interruption. There is the second risk, which is of data being stolen, data theft or data leakage. My data is available with somebody else now, somebody who should not have it. And at that point in time, I know that there is an impact to my business. The impact could be from uh, somebody like intellectual property, which says, okay, somebody else can do what I'm doing right now, therefore it's impacting my business. So the impact could be that I no longer have the data to work with, which is partly related to business interruption again. Right? So data, somebody else having my data or data exfiltration, as you would call it. It could be then published on the dark web, and I might have to put in measures to get that data back. And the third part is the regulatory and compliance related issues that might come up, fines that I might have. We know that GDPR is going to charge you X amount of your revenue. You know that India's new DPDP is going to charge you X amount of money. So everywhere there are huge regulatory fines which are there. And these are the coverages that are actually offered by cyber insurance. Now, some basic concepts in the insurance industry. They talk about two sides of insurance, the asset side and the liability side of insurance. So they talk about it from the balance sheet terms. So an asset side is the kind ensuring the assets that I have to make sure that they are. So when you buy homeowners insurance or when you buy property insurance, that's an asset protection. I have an asset, I want to protect that asset. Should something happen to that asset, I want to be in a position to be able to recreate that asset. Cyber has a very similar thing. Uh, to be able to recreate data. So in insurance, you will have some, in cyber insurance, you will have some terms, some clauses which will say, we will pay you X amount of money to recreate the data that you have lost. So that's something which you can obviously buy. The other side, which is the liability side, is to manage your liabilities. What happens if somebody, if you have a legal liability because of your data being exposed? You have cases against you and you have to have defense costs, the cost to defend yourself in courts of law. And that's the liability side of coverages. So insurance always thinks from the asset side and the liability side of coverages. In fact, they have different departments for each of these sides of businesses. And in cybersecurity also, we think about it from assets and liabilities, but we don't quantify them or we don't, sort of segregate them as such. I know definitely that my database, my customer database is very, very important and I need to protect it. And but should my customer database get corrupted, say customer database get corrupted, what is it that I require to restore it? I will have to contact each of my customers, which means maybe my sales team will have to spend an inordinate amount of time getting back to that database. The recovery cost of that data is what it's called. So these are things which are the nuances in cyber insurance that you have to read. So the asset side and the liability side. Many times I'm connected with the whole supply chain ecosystem, and a breach at my supply chain end, at my third party end, will impact me. And we have done that in our risk assessments, right? We know that my data goes to X party for certain processing. What happens if there is a leak there? How do I cover it? Will my insurer pay for a third party data claim? So these are questions that we have to ask, we have to check, we have to figure out. So the whole process is quite straightforward. And uh, all of these elements come together to talk about how your risks are managed and how much insurance and how do you go about thinking about your insurance process. I know I think I went a little all over the place, but it was just topic to topic, I think.
No, I think that gave a perspective, right? You did speak about, I was even thinking of asking you what are those products which people should be looking at, right? And one couple of examples you gave is in case your data is not available, this,
Yeah,
and it ends up in business interruption. It could be a ransomware, it could be human error, unintentionally somebody deletes the database, anything can happen, right? So
yeah.
that's the beauty of working with technology, right? It's every day is a new day and you have new things to worry about. And then you also talked about the legal risk, right? And the cost of defending your case with people who are probably accusing you for negligence or unauthorized disclosure of information. Then we're also referring to uh, areas such as, you know, branding, brand reputation protection, things like that. So I guess there are several things which people should be looking at from a risk perspective and also see where they should actually prioritize in terms of their investment in an insurance policy. So on the same subject, I just want to ask you another question in a different context. Now, typically, when you look at a motor vehicle insurance, right? So both in India or Sri Lanka for that matter, uh, there's something called a no claim bonus. You don't claim, you get a discount when you renew your insurance, right? So
Right.
that's an incentive for you to drive carefully so that you don't encounter an accident, right?
Yes.
Intentionally or unintentionally, right? So even I think the rule of driving is even if uh, the person on the road is chaotic, you need to stay calm and stay safe, right? So you drive
Right.
safe so that you don't get into trouble. How do you relate that to the cyberspace. Now, you also mentioned about BYOD, right? And BYOD, I mean, my kids actually, when they were small, they used to call it bring your own dinosaur, right? You know,
Right.
we call it the device, and for them, it is the dinosaur. When they hear all kinds of risks, which we talk about in different forums, it definitely, adds up to becoming so huge in terms of a risk landscape or risk posture. So, is there an incentive for being cyber hygiene? Because,
Yes, absolutely, absolutely. Uh, so there are two times when a cyber insurer will actually look at your portfolio or look at what you're doing before they give. First is before they give you cyber insurance, and second is at the time of renewal of the annual renewal of the cyber insurance. Uh, So cyber insurance is not a very standard kind of insurance that you get. It's not like a life insurance or a motor insurance, which has reams and reams of data that, I can classify that people in the 20 to 30 years of age are more rash drivers. Therefore, I have to charge them higher for their premiums. So those kind of things, computations have been done in other insurance lines like life and motor because of the huge number of policies that are there, because of the knowing exactly how the claims come through, what happens. A lot of cyber insurance policies are what we know as bespoke policies. Now, when you and I go to buy, say, a life insurance or a health insurance or a motor insurance, we do not have the option of changing the terms and conditions. You can ask for it, but you will be said, look, this is what is there. It's come from the top. You have to buy it or not buy it. These are the only two options you have. But a cyber insurance, because the premiums are higher and the coverages are higher, and the requirements are different for each individual, the thing that we have to remember is that you have specific areas in which you can actually discuss these things. So if I want a specific type of coverage, I can ask for it. And then those terms and conditions could get included. Now, that's one of the very important parts of buying cyber insurance. It's quite bespoke. I can build cyber insurance. How well I connect with my broker and my insurer and explain to them the risk that I'm trying to buy insurance for also matters in this case. So an insurer will first ask you to fill up a big form, which is known as the proposal form in the industry. Uh, and we have all been on the other side where we have filled up this form and it has been one of the most boring half an hour of our lives ever. And uh, what happens at the other side, at the insurer side, is that that form is analyzed. You understand what kind of risk you are writing. Because finally, the insurer has to put in his or her money where your risks are. And for that, they need to understand a lot of it in depth. Right? So, when you start talking about how how much of how do you want to do this cyber risk thing kind of a thing, that proposal form or the way you explain your risk to the insurer becomes very important. And in that, when you are able to showcase that, I have mitigated all the risks that I have, but still there is a chance that I might have. Therefore, I want you to give me cyber insurance. You can look at negotiating some of your premiums. You can say that, look, I have a history of not having any claims. So all of that does help. It's bespoke, so it's not like you get these motor no claim bonuses, which they automatically accrue. Here, you will definitely have to negotiate. You can ask for additional coverages because uh, a very typical case, right? When you spoke about PCI DSS a couple of times. Being a PCI DSS QSA or being an assessor for PCI DSS requires you to have cyber insurance. It requires you to have coverages. And typically, companies which are in this industry seek out coverages for liabilities coming out of PCI DSS. Now, explaining that to an insurance professional saying, look, this is my business of PCI DSS, I am an assessor, and I want to make sure that I am covered, itself is a task. But if you say that I have done a good enough job, I give good reports, I have qualified my reports properly so that I don't have any liability, explaining that becomes more important than telling what kind of controls you have in place for managing your own organization cybersecurity. So that's how you go about doing cyber insurance negotiations, I would say.
I think there's a lot to talk about, right? So I guess we can go on talking in that particular point in itself for a couple of hours. But in essence of time, I just want to quickly, draw you out to something else. Uh,
Sure.
Today, you did briefly mention about the DPDP in India and Sri Lanka. We have the PDPA, and
Yes.
GDPR seems to be the godfather or godmother of all these regulations, right? But I
Mm.
guess the Constitution also talks about the individual's right. In every country's
Yes.
constitution does talk about it. But the way the governance in the governments have evolved over a period of time, the right to privacy has never been given that amount of importance, especially in this part of the world. Now, with this law coming into play, there's a lot the businesses will have to do. In other words, they may even have to re-engineer the complete process as to how they collect the data and use them and also store them, and as to who
Yes.
has access to this data, right? So there could be risks which we may not be able to foresee. Now, there's also this the popular statements which we in the industry we say uh, there are only two types of organization in the cyberspace. One who know that they're being hacked, the other one who doesn't know that they're being hacked. So in other words, what we're
Right.
saying is everybody is hacked, right? So,
Right.
so in that context, it also becomes a huge challenge for the insurance companies to look at that incentive. Now, coming back to the compliance phase, is having a cyber insurance going to get the regulator think, okay, these guys are compliant? Would compliance equate to a cyber insurance policy? Or is it because the regulator is asking us, let's get some policy and say we have a cyber insurance policy?
Right. So uh, that's a very I would say you've hit a question which brings a lot of discussion items around why we buy any kind of insurance actually,
Yeah.
and that's a very mindset issue that we talk about. So I'll give you an example, right? Most of us understand that we are required to have a life insurance policy because protecting our next of kin. Therefore, we want to have certain uh, coverages that we would like to have because I want my next of kin to have a good life or have a reasonably same life if I'm not available. And therefore, I buy life insurance, and that is sold to me through a plethora of agents, banks, every channel, and they give me all that information. But for a car insurance, most people buy insurance because you're mandated by law. Nobody says, I am a rash driver, let me buy insurance. Because everyone in the world considers them to be very good and safe driver, right? And that's where the mindset issue comes in. And when you say there are regulatory fines and compliances, most people would not say that, look, I have not been hacked or I will definitely be hacked, therefore let me buy cyber insurance. Uh, People just say, look, what is the minimum I need to buy to get away with this? And that's been the mindset across, I would say, which is something which uh, the insurance industry itself is talks about and understands that this is a mindset that people do carry. Uh, and us as cybersecurity professionals also contribute towards bringing that mindset into place sometimes. Right? We say there is all these risks, and if you put in these controls, you have nothing to worry about. So we go to the board and say, look, I want to buy a DLP, I want to do these things, I want $100 million budget, and I will help you mitigate cyber risk. And when an incident happens, we go back and say, look, I want to manage the incident, and therefore I need more money from the board. But the very fact that understanding that yes, this can happen, if it happens, what should I cover for? That's something which every cybersecurity professional and cybersecurity consultant and CISO should really think and put forth to the board. And that's what you need to buy insurance for. When the event happens, I might require to have a forensic analysis done. I might require to have a rebuilding of my databases. I might require whatever are the things that I require to do as a business. I want to be able to list them down, identify the costs for each of them, an approximation, and insure myself for that amount so that my business's balance sheet does not get impacted. And if you have that thought process, the thinking about insurance premiums and reductions and all of that does not come into picture because you're able to think in the right direction. You're able to convince your CRO and the board that, look, this is what I want to do. While having all these controls in place helps, my very specific requirements are these. And in fact, that's one of the things that's a very growing part of consulting businesses, and you should probably, if you're not into it, you should pick it up as well. And that's something which definitely is a good part for cyber professionals to get into, cybersecurity guys to be
Sure thing. I'll take on that, right? So I
in.
quickly want to ask you this question, right? Mindset. Right? And I think it's human to have this mindset. And a lot of people they say life is short, and you die only once, and that's it. But what people forget is life is short. You've got to live every single day,
Yes.
right? For you, for the loved ones, and for your friends and family as well, right? So, how do we, as professionals, cybersecurity professionals in the industry, how can we change this mindset? So, the point which I want you to talk about is one on collaboration, the other on the education. Are there
Mm,
anything which is out there we can look at? Or, for example, does Risk Quotient have anything as a learning platform where the organization can adopt and gain out of it? Go ahead.
absolutely. Yes, yes, yes. So there are various things that a cybersecurity professional should understand about insurance. And similarly, there are various things that an insurance professional should understand about cybersecurity. We have spent a lot of time in the insurance domain, and luckily, Risk Quotient is in a position, which straddles both these areas, the cybersecurity domain and the insurance domain. So we have sort of built courses, we have built training programs and seminars for insurance professionals to be able to underwrite cyber insurance better. So take this example, Sujit, that you are an insurance professional who knows the insurance industry in and out. You have been on the liability insurances in general insurance and saying, I can do so many risks. I have understood how to write a risk. But when it comes to cybersecurity, you're suddenly given thrown terms. So let's say an organization approaches you and says, "Look, I want to buy cyber insurance. I have firewalls in place. I have a DLP in place. I have a proxy server. Nobody can log in from to any other websites outside of my domain. I have DMARC and DKIM implemented on my email systems. And therefore, I have no risk to you. Just give me the insurance as it is. I'm giving you my money. It's not going to be ever used." And as an insurance professional, you suddenly, have this set of words. You've heard of a firewall, probably, and you have a vague understanding of how it works. But apart from that, all these terminologies are very new to you. And the tech industry thinks in acronyms. So it's all these DLPs and DKIMs and DMARC and all that stuff, which becomes difficult to understand. So we have in fact built courses or seminars for insurance professionals to understand and help them underwrite cyber risk better. Underwriting is the process of actually being able to look at a risk and say, this is what I want to insure or not insure. So we have actually built that. And those are things which definitely can be availed. We can think about if we want to discuss maybe offline, we could discuss how we can bring it further down as well. From the cyber security professional's perspective, it's very important to learn how to quantify a cyber risk. Because when you take it to the board, you want to be able to give a good, reasonable ballpark saying this is the risk that I want to cover. Now it's the board's decision which says, look, I don't care about it. Let's accept the risk. Or they say, okay, don't do anything about it. Let's buy equivalent amount of insurance. Or they say, no, no, this is not something which I can accept. Put in all the controls that you can to mitigate this. Which is why you see that, for the same risk, you will have different decisions that are being taken. For example, a bank will have, multiple DR sites, a short DR, a long DR, with different replication strategies, because the data availability is very important to them. I need to have near real-time data availability, and it should be online all the time. Whereas for a different kind of a company, the same risk is okay. I'm not available for 7 days. That's fine. I'll just manage without having a DR site. I'll work from my laptop and I'll manage things. So you have different decisions being taken. And how do you enable that decision making? How do you quantify the risk that you have? And that's something which a cybersecurity professional should learn. There are some very good cyber risk quantification methodologies. We offer seminars on cyber risk quantification, right from the basics of statistics and probability to how to look at risks to how to uh, compute the dollar value for these risks and how to present it to the board. The whole things are available. So yes, there are a lot of ways in which cybersecurity professionals and insurance professionals can educate themselves. So definitely, yes, there are lots of mechanisms. If you just search for it on the internet, you'll find many of them. We are happy to do all of these as
You're giving me ideas now, right? So I'm
well.
definitely going to request you to consider flying down to Sri Lanka so that we could actually consider doing a workshop
Sure,
where we can actually walk our professionals, right? Not just the cybersecurity and the IT professionals. And I think we should also use the opportunity to educate the C-suite in terms
absolutely,
of
yes,
the thought process which goes in the minds of the underwriters. And I think it's important for us to
absolutely,
understand when we look at a risk and when we talk about investing money in a premium, because sometimes people might say, hey, I mean, I invested so much of money and nothing happened,
yeah,
right? But then on the flip side, we estimate and say it's X dollars. And then you see there are unforeseen claims coming in, either from your
yes.
customers or your partners, saying, "Yeah, your incident has impacted somebody you have not even thought of," right? So that's the supply chain side of it, right? So I'll be coming back to you on that, and I'll
So
also
just to
request.
interrupt you,
Yes, go ahead.
when I started with cyber insurance, when I started learning about insurance, right? I did some research. This was a few years back. So
Right.
when we were really getting into the insurance kind of thought process, cyber insurance. One of the things that really hit me when we talked about, and I was trying to understand how the whole insurance thing works, is that take this case of buying life insurance, right? I'm sure you have a life insurance policy. I have one. What are you betting for in that case, right? The person as a buyer of the life insurance, says that in case I die, I'll get money. Right? Whereas the insurer is betting this person will not die, he's healthy. So when you buy insurance, you're betting on when you will die, and the insurer is betting that you will not die. It was very morbid to think about it, that my life insurance policy is this way.
But he infuses fear in your mind that if you
Yes,
die, that your family is going to be left
absolutely.
high and dry. They probably have to get on the streets. So
But when you put money on the table, he's betting that you will not die and he'll make money out of it. And
every year.
in fact, all of us pray that you never have to use that money.
Absolutely. Absolutely. Absolutely.
Yeah,
So, CK, the last question I want to ask you is,
sure.
how does the future look?
Yes. Uh, the future, so cyber, has been evolving drastically over the last few years, especially in the last 6 months. with the new AI technologies coming in, there is a huge growth in different types of artificial intelligence. There is a huge progress in quantum computers. So a lot of it is very, very different from our old school thought processes. So the way we look at risks, the way we look at understanding of cybersecurity itself will change in the next few years. A lot of people are using artificial intelligence both on the attack side and defense side of cybersecurity. If I'm building a new artificial intelligence based platform and I want to buy cyber insurance for it, how does an insurer look at it? What are the risks of artificial intelligence? Because it's very new now. What if I build a platform that is built on a large language model, which is essentially like your chat GPT,
Yeah.
which is giving me wrong answers? What kind of insurances do I buy? Should I be buying insurance for my legal liability because somebody said, look, I followed what your tool told me and it gave me the wrong answer? It's very typical, like in the earlier days of using Google Maps or Apple Maps, it would take you to the middle of the bridge and say, top of the bridge and say, take a left from here. And you really wouldn't, but obviously, if you did take a left, whose liability was it? Right? So those kind of questions have started to come up. And it's very interesting times. In fact, I did a workshop on artificial intelligence risk management framework at the ISACA Mumbai chapter for their annual conference. And there is a lot of buzz in the cybersecurity industry on how do we manage AI risks. Because whether we like it or not, it's suddenly been thrown upon us. Companies are building AI platforms, whether cybersecurity professionals like it or not, whether insurance professionals like it or not. It's being built, and we have to learn how to identify the risks and manage those risks and mitigate those risks and buy insurance for those risks. So I believe with these new technologies, with things like the metaverse coming in, what are the kind of risks I'm looking at? What are the kind of coverages I'm looking at are going to change. So definitely we are in for very interesting times. That's what I would like to say.
Absolutely. It's going to be definitely interesting times. Final thoughts. What would your giveaway to the business? What would be your advice to the business when just before we sign off? So what would you like to tell them?
Yes. So I think I have advices to separate sets of people. One is to the board of directors of any business that cyber risks are here to stay, and it's not just a question of whether you want to put in the controls or buy an insurance. It is more nuanced than that. You need a cyber security or a cyber insurance professional to give you advice specifically for that. It's not a flip of a coin and say, look, let's get it insured or not get it insured. So I would advise the board of directors to understand their reliance on cyber, on technology first, and then take decisions about cyber risks and cyber insurance. To the CISOs and the cybersecurity professionals out there, I would say that understand how to present things to the management in the entire organizational context. Uh, for we have been for far too long we have been giving status about antivirus and patch management and number of vulnerabilities on open systems. Right? Scale it up. Figure out how do you represent that to the board. What is the kind of risks that you are looking at? And it need not be complex. Some basic quantification tools will help you get there, but to present it in a way that the board understands, that your organization understands, and everybody understands. One of the major job which a CISO should have, and I believe that very strongly, is to be able to talk the language of the business and explain cyber security to them. Going to them saying I have 7 critical vulnerabilities open from my scanning is not going to help in any way. I think that translation into this is the kind of business interruption and this is the kind of losses that we are looking at is very, very important for the season.
Absolutely. So, PK, thank you so much. It's been wonderful talking to you, and you have shared a lot of ideas, a lot of points, which definitely, for me, it has been very enlightening. And I'm sure for those listeners, the audience who are going to, been listening to this record, the panel discussion, the fireside chat, I'm sure it was beneficial to them as well. So the future, the threat landscape is going to evolve. So will the industry, the cyber insurance industry will also evolve. And what I like to emphasize is it's adapting in itself, right? So we're seeing
Absolutely.
AI coming in, we're talking about ML, and how AI is going to be used is something which we
Yes.
ourselves do not know, right? And that is something we will only experience and adapt as we go. And my closing thoughts would be that organizations should pay attention to their risk and at least start doing a basic assessment in terms of what their exposure would be and what would
Yes.
be their quantified risk in terms of cyber insurance, which they need to look at. So while it is easier to assume that they got all the controls in place, and I guess it is important also to test the effectiveness of the control and understand if things were to go wrong, how bad it would get. So look at the best case use case and the worst case scenarios as well. So
Yes.
with that, I again want to thank CK for taking time to share your thoughts with me. And on behalf of
Thank you.
the
Thank you for having me here, Sujit.
And on behalf of the ISC Square, ISC2 Colombo chapter, I'm still trying to get used to the new branding terminology from the Square to
Yes.
ISC2 Colombo chapter. And on behalf of the members as well, I want to thank you. And this is Sujit Christie, the president of ISC2 Colombo chapter, signing off and see you in another edition very soon.
Thank you.
Take care and take care.